Hello investors and future investors, welcome to the channel. For today's video, I'm going to show you how to make $500 monthly with two stocks selling options. Now, if you're working a regular 9 to 5 or you're new to options trading and you want to make some consistent income, then you definitely have stumbled onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'll be showing you two stocks that I currently do hold in my portfolio and how I'm going to be using these stocks in order to make $500 on a monthly basis. Now, on this channel, I focus on trying to help small account portfolios grow with options consistently over time by using safe option strategies. If this is something you think that you're definitely going to be interested in, then go ahead and check out the links in the description below. Now, for today's video, we're going to be using none other than Robinhood, ticker HOOD. So let's go ahead and get down and dirty with options. Now, when we say we're going to be getting down and dirty with options, it simply means that we're going to be giving you an exact walkthrough of the option strategy and how it's done in order for you to be able to follow along with us. That being said, we're going to go ahead and we're going to go to Trade Hood Options to your bottom right in order for us to open up the option chain. Now, here we are on the option chain. Now, for those of you that are new to the channel or new to options, this wide area right down here is known as the option chain. And what the option chain does is that the option chain gives us enough information in order for us to make an informed decision before getting into any option contracts. Now, before we go ahead and get into these actual strategies, I need you guys to do yourself two favors. Favor number one is going to be always make sure to do your own due diligence before investing. And favor number two, always make sure to have an exit strategy before entering any option trade. Now, for this option strategy, we're going to be making sure we go to sell, which is the number one criteria. And now we're going to be selling calls. So the second criteria, let's make sure we hit call. Now we're going to go ahead and choose our expiration date. Now, I am going to be showing you monthly option trading. So we're going to go out on a monthly basis. So let's go with the April 17th. So this is going to be week 1, week 2, week 3, April 17th is going to give us a monthly, which gives us around 25 days to expiration. So now that you have your sell and you have call, there's going to be two important criteria that have to be met in order for you to perform this option strategy. You need either of these. So the first one is going to be you need to own 100 shares of the stock or more in order for you to use the covered call option strategy. The second criteria is that you must be able to control 100 shares of the stock in order for you to do the covered calls. Now, to own 100 shares and to control 100 shares are two completely different things. For the purposes of today's video, we're going to be assuming that you own 100 shares. So let's just say you were to buy 100 shares of Robinhood right now, you would be paying $44.40. So that's going to cost you $4,440. The reason for that is that when trading with options, it's always going to be multiples of 100 shares. So 4440 multiplied by 100 is going to give you $4,440. Okay, now we have our sell, we have our call, we have decided on our monthly option strike date. Now we're going to go ahead and choose our strike price, and that strike price we're going to be choosing is going to be over the current share price right here. So let's go ahead and we're going to scroll up. Now remember, this video I'm going to be showing you how to make $500 monthly. So I will be going with the $50 strike price right here. Now for that $50 strike price, I have a very high chance of profitability. When selling options, always try to make sure that you have a high chance of profitability, which means the odds of this trade going in your favor is extremely, extremely high. Now, with a high chance of profitability of, let's say, 81%, that also means there's a 19% chance that this trade goes against you. So remember that. Now, with the $50 call and an 81% chance of profitability, for selling options, you're going to receive some kind of money or some kind of premium. That premium you're going to be receiving is going to be $1.33. $1.33 in the options world is going to translate to be $133 in the real world. And that's because, once again, each option contract contains 100 shares. So you simply multiply 1.33 by 100, and that's going to give you $133. So we're going to go ahead, we're going to click into that. There you have it, the covered call option strategy. Now, before we go ahead and I show you how to make some money with this, let me just go ahead and give you a bit additional information, which I think is definitely useful. And for that, we're going to click into the strike price, and that's going to open up what's known as the secondary option chain, or the Greeks right here. So with the $50 strike price, I just want to bring to your attention the delta. Whenever you decide to sell covered calls for income, it's highly advisable that you go with a delta of 0.3 or lower. That just helps and increase your odds of the trade going in your favor. The other thing I want to bring to your attention is the implied volatility right here. When selling options for income, implied volatility of between 50% and 100% is ideal. And the reason why that's ideal is because any implied volatility below 50% is going to be extremely safe. And if it's extremely safe, that means the premium are not going to be worth the trade. And the vice versa to that is going to be any implied volatility of 100% or higher is going to be risky or going towards a risky territory. Now, going towards the risky territory is also good because the premiums are going to be absolutely juicy. So you need to decide for yourself what works for you, your portfolio, and your long-term goals. The last thing I want to bring to your attention before we actually continue with the trade is going to be the open interest. As you can see here, the open interest is $20,755. What the open interest tells you is that this particular contract at $50 call, there's 20,755 people that actually hold that option. So I just thought I should bring that to your attention before we continue with the video. Now let's go ahead and continue. We're going to go to continue right here. We're going to choose the amount of contracts we want, which is going to be 2. And then we have to choose our price that we want to receive. So the limit price right here is going to be 1.33 to 1.37. Ideally, what you want to get is the midway mark. However, you're selling income for options, and this is just a 4 penny difference. You do stand to get $265. You need to ask yourself, is it really worth you trying to get a better price for just 4 pennies? In my case, it is not worth it, so I'll definitely go with what Robinhood suggests right here. Once you go ahead, you execute this contract, you're going to be receiving $265. Now, I did promise you this video, I'm going to show you how to make $500. So I'm going to show you how to use the other stock to make the additional that you're missing here to make $500. Now, before we go ahead to the second stock, I want to show you guys how to manage this trade. And for that, let's go ahead to an actual sell call I do have in my portfolio. Okay, so this is an actual sell call I have on this actual stock. And as you can see, I did have the $50 call right here. And let me go ahead and go down and explain the trade to you. So the current expiration date is going to be this coming week, Friday the 28th, and the average credit I received was $30. Now, as you can see down here, I'm up 23%. As an income option seller, you always want to pay attention to your percentage gain or your percentage loss. So that's going to be coinciding with your total return. So I am up $7, which represented 23%. However, when I'm selling options, I like to close out my trade at a 75% gain or higher. So I'm not actually going to close this out. I'm just going to show you how to manage this trade. So if this happens to you, you simply go ahead and you go to view all options. You're going to go to buy and you're going to go to call. The reason why you're going to go to buy and call is, remember, the way you got into this contract, you did go to sell and call. So you need to do the opposite of that in order to get out of the trade. And the opposite of that is going to be the buy and the call. Then you're going to go ahead, you're going to choose a strike date you chose. So like I just showed you, this expires on March 28th. So let's go ahead. We're going to look for the option that we chose, which was the $50 mark right here. Then we're going to go, I'm going to select it. We're going to hit continue. And that is how you manage the trade. So if I were to decide to close this option right now, I simply go to buy, call, I select my exact strike price for the contract that I do have. I go ahead, I select it, I go to execute the order. Now, if you guys are getting any value from this video right now, go ahead, like the video, subscribe to the channel. But most importantly, a lot of you guys have not turned on your notifications to get an alert whenever I drop these videos. I usually do post quite consistently. So go ahead, turn on your post notifications. So now we're going to go ahead and get into the other stock that's going to allow you to make that $500 a month income. And that's going to be none other than Micron Technology, ticker MU. So once again, full disclosure, I do have both Micron Technology and Robinhood in my portfolio. So I'm showing you what I am doing with my portfolio. So let's go ahead once again to trade MU options to the bottom. And we're going to open up the option chain once again. We're going to go to sell and we're going to go to call and we're going to choose our strike date. Remember, we are doing monthlies. So April 17th is going to be that perfect strike date for us. We're going to go ahead and choose our strike price. Remember, we are assuming that you're going to pick up this stock right now at $94.56 or $9,456. Now we're going to go ahead and choose our covered call strike price above the current share price. And for that, we're going to be going with the 105 right here. Now, this 105 gives us an 84% chance of profitability. Once again, an 84% chance of profitability tells you there's an 84% chance that you win this trade. It also tells you there's going to be a 16% chance that this trade goes against you. Now, because we selling once again, we're selling a call, we're going to be receiving some kind of money, and that money is going to be $1.28 in the real world, $128. Let's go ahead. We're going to click into that. Once again, the covered call option strategy, which by the way, the covered call option strategy is what's known as a win-win option strategy. Now that we're currently in a bear market, the covered call option strategy is going to make anyone look like they're an absolute genius. But let's go ahead, go to continue. We're going to choose 2 contracts. And there you have it. So for the first option strategy I show you, you stand to gain $265. This one you stand to gain $255, which is going to be way over the $500 limit. Now, to summarize, if you're new to option trading or you're working a regular 9 to 5 and you're trying to make money with options on the side, then it's highly advisable you choose option strategies that are pretty consistent and pretty safe and you don't have to manage while you're at your regular 9 to 5. So the option strategy that I would suggest that I've been doing for years is going to be the covered call option strategy. In order for you to do the covered call option strategy, 2 criteria absolutely have to be met. Either you buy the stocks outright and buy 100 shares, or you need to be able to control 100 shares. If you do want to see how to control 100 shares of a stock in order to do the covered call option strategy, just search the channel for what's known as a leaps option. Now, once you do that, you could take Robinhood. You're going to do 2 contracts, which is going to give you $265. Then you're going to use Micron, which is also going to give you $255 and $500 a month quite passively. In order for this option strategy to be very, very successful, please do not choose stocks you like. You need to look for stocks that have very strong fundamentals. Stocks that are already in the S&P 500 like Micron Technology is going to be some of your best chance. If you do happen to like the stock, then that's just going to be an added bonus. Remember, the whole point of you selling options is to generate consistent income. So take your emotions out of the game, get good stock, do the exact same strategy over and over again, be consistent with it, and you're gonna see those investment gains continue to grow your small account portfolio. So if you guys are interested in this option strategy in order to help you grow your small accounts portfolio, then check out the link in the description below where I give one-on-one with different people. So go ahead, like the video, subscribe to the channel, but most importantly, if there's anyone out there struggling to grow a small account portfolio, then feel free to share this video with them. Let's help as many as we can. And until the next video, keep pushing your investments.